Welcome to the IFRS 15 Basics, Step 2, Identify the performance obligation in the contract. I am sure you remember the IFRS 15 5-step model. In the last video, we covered Step 1, so I've looked at the criteria for identifying the contract with the customer. We will now move on to Step 2. Once we have identified the contract with the customer, we need to identify the performance obligations in the contract. A performance obligation will be the unit of account when applying IFRS 15 and will be the key to determine how and when revenue is recognised. So what is a performance obligation? A performance obligation is a promise to provide a distinct good or service or a series of distinct goods or services to the customer. So let's see what a promise is. A promise exists if the promises create a valid expectation that the company will provide a good or service. This can be based on business practice, published policies, or other specific statements by the company. It is therefore really important to understand a company's policies, practices, and representations made during contract negotiations or within marketing materials, business strategies, or other similar documentation. It is also really important to remember that promises in a contract can be either explicit or implicit. Promises can take many forms. Transferring or reselling goods or services is a typical one, but promises can also include standing ready to provide goods or services in the future, building, designing, manufacturing, or creating an asset, for example, building a house, granting a right to use or right to access an intangible or license, for example, intellectual property where another company can use the knowledge sold to them, granting an option to purchase additional goods or services that provides the customer with a material right, or performing contractually agreed upon tasks. Each performance obligation is a promise to transfer to the customer either a distinct good or service or a series of distinct goods or services that are substantially the same and that have the same pattern of transfer to the customer. IFRS 15 provides detailed guidance to determine if a good or service is distinct as well as whether an obligation fits within the series guidance. Let's see the guidance on the next slide. What are the criteria to determine whether a good or service is distinct? Firstly, a customer can benefit from the good or service either on its own or together with other resources that are readily available to the customer. That means the good or service is capable of being distinct. And a good or service is separately identifiable from other promises in the contract. In other words, the promise to transfer the good or service is distinct within the context of the contract. The standard helps to explain that readily available resources are goods or services that are sold separately by the company or in the market, or the customer's resources that are owned already. IFRS 15 also gives us factors to help us to determine if a good or service is separately identifiable from other promises in the contract. Let us look at what those factors are. IFRS 15 provides factors that indicate that an entity's promise to transfer a good or service to a customer is separately identifiable. They include, but are not limited to, the following. The entity is not using the good or service as an input to provide or deliver the combined output specified by the customer. The good or service does not significantly modify or customize another good or service promised in the contract, and the good or service is not highly dependent on or highly interrelated with other goods or services promised in the contract. For example, The fact that the customer could decide not to purchase the good or service without significantly affecting the other promised goods or services in the contract might indicate that the good or service is not highly dependent on or highly interrelated with those other promised goods or services. Let's consider some examples. In one example, a customer has contracted to buy an installed machine. Let's assume that the installation services can only be provided by the machine seller, and therefore the customer cannot benefit from either the machine or installation on its own. They are highly interrelated. The service significantly customizes the machine. In this situation, there's a single performance obligation. In contrast, if the installation services were customary but could be performed by someone else, for example, the purchase and installation of a washing machine, then it is most likely that there are two performance obligations, the washing machine and the installation, which are distinct. This judgment can sometimes be difficult and is dependent on the information that is available. What about the situation where there is a series of distinct goods or services provided over a period of time? A good example would be a daily cleaning service. In this case, the arrangement would be accounted for as a single performance obligation if the goods or services are substantially the same and have the same pattern of transfer to the customer. We can conclude that a series of distinct goods or services has the same pattern of transfer if each distinct good or service in the series could meet the criteria to be a performance obligation satisfied over time, and the same method would be used to measure the entity's progress toward complete satisfaction of the performance obligation to transfer each distinct good or service in the series to the customer. If the series guidance is applied, revenue is not allocated to each distinct good or service, and instead, management will need to determine a measure of progress for the performance obligation that best depicts the transfer of goods or services. This point, together with the criteria to be a performance obligation satisfied over time, will be explained later in the 5-step model. So, identifying the performance obligation is not always as easy as it seems. However, following the areas that we've discussed should help you to satisfy step 2 of the 5-step approach. We hope this video has been helpful. Look out for step 3 coming shortly.